Cool. So today we're going to be talking about the US dollar strength and in the market sustainability. How sustainable is that? Because we've seen some rallies up, some rallies down, but where is the actual market going? So the case of the stronger US dollar is going to be the first thing we're going to be talking. My goal over the next 45 to 50 minutes, it's pretty much explore the underlying dynamics behind the recent strength of the US dollar and to try to critically assess what are the current rallies in both equities, Forex, commodities. They have the staying power to continue well beyond the short-term optimism, or if it's something that it's going to be reverting soon, Right now, we have a very, very interesting moment in the global finance in general. For the first time in years, the United States and China, two of the most influential economies on the planet, they have made a joint move toward the escalation. They agree to move to roll back on tariffs by 115 percentage points each. So they've created a 90-day window of opportunity. And this agreement reduces U.S. tariffs on Chinese imports from 145% to around 30%, and China tariffs from 125% to just 10% on U.S. It's a move that has taken a lot of people by surprise, especially after Donald Trump announced that he's open to 80% tariffs only on China, and then they came up with 30. So wow, that's nothing expected. At least temporarily, there are a lot of shifts into the trade policy. So the development, we had a lot of moves immediately on the market. S&P 500 closing at 4,844, the Nasdaq surging over 4%, the Dow gaining nearly 1,200 points, crude oil markets responding positively as well, bouncing sharply in anticipation of improved demand conditions. Conversely, traditional safe havens like gold, the yen, all of those, CHF as well, euro, that was sort of a safe haven a few days ago. It's all of them saw an outflow and the classic rotation to the risk asset. So now it's what we call risk on market. Bitcoin has been rallying, gold has been falling, commodities in general has been falling except oil. So that's pretty much what we're going to be looking to cover in a few minutes, few hours. Okay. But before we go any further, I need to put the risk disclaimer up. So as usual, I'm going to give 1 minute to 2 minutes. You guys go through, read it, and then I will be back and we can start. Okay. Come back to here. All right. Well, lots of things. So let's start on the strong US dollar first. Let me go to the VXY. Cool. So, as we can see, US dollar is trading above, again, the 100. And it's really interesting to see that the dollar has had a really, really, really strength since yesterday, after what... And, I really thought about, and I've been mentioning about as well, it seemed to be like a clear shift into a bear trend after the 2022. But, DXY index has rebounded back above 100 and now trading at 101,606. Defying expectations and prompting a wave of analysis. And this strength is not arbitrary. It reflects deeper structural dynamics and short-term catalysts worth a talk on today. So to begin with, the FOMC instance has become an anchor for the near-term dollar performance because for those who don't know, Jerome Powell commenting the most recent FOMC last week, were carefully measured and reinforcing that the Fed commitment to a data-driven approach because inflation remains elevated. The labor market still appears robust on the surface. He stated, it's appropriate to be patient. So if he say that, like, what can I say? He also emphasizes that the Fed does not see a pressing need to cut rates in the current environment. So, this has allowed the short-term U.S. yields to stabilize and leading up to support the dollar, as we could see. However, the strength comes at a cost. Okay, so the prolonged imposition of the tariffs continue to exert upward pressure on prices, undermining real yields. And inflationary trade policy, particularly reciprocal tariffs on steel, pharmaceuticals, and automobiles, is destroying. It's distorting the price signals and complicating the Fed path. A weakening of real yields is historically a bearish signal for the US dollar, and this dissonance between nominal support and inflation erosion makes the outlooks unusually complex. So I can't tell you, that's what's going to happen. That's not what's going to happen. So geopolitical dynamics, are increasingly higher and higher every past week. So Trump administration 10% universal tariff remains intact. So that has nothing changed. Despite temporary rollbacks for specific allies like the UK. Negotiations with China remain cautious and conditional, but Trump has suggested that even if a broader trade accord is reached that worse, countries with large trade surplus will face elevated baseline tariffs. And the administration exploration of high-internet tariffs on India and Pakistan further broadens the scope of this protectionist pivot, in my opinion. So, when we look at the weekend, I think was last day to Friday, the market sort of had a little bit of a risk-on mood. We can see that from Aussie CAD. That has been the one we've been tracking quite a while now. So if we look here, last Wednesday last Friday we ended up like somewhere around those levels here. After that risk on mood, saying that Trump would have a chat with vice president of China over the weekend, market sort of felt that pretty good. Therefore, bought a little bit of risk and sold risk off. So if we go like for gold, for instance, gold has been continuing falling, and indeed, it's a pretty easy trade, to be honest, because risk on gold goes up, risk off gold goes down. So that has been how market has been reacting recently, and fair enough. Like it's how behavior, in the overall sense, for the whole market. So, anyways, even if we look at Bitcoin, just to finalize, and if you look at Bitcoin has been going up as well, very, very close to the highs. Now coming back to XY, so we had a interesting thing because on Friday, Donald Trump said that he's happy to do an 80% tariffs on China. So market was like, okay, that's really great. They're going to have a chat over the weekend. They're going to come to an agreement, and then 80% will be done, and that's it. Perfectly. Well, they ended up having an agreement of 30%. So pretty much 50% less than what Donald Trump was saying to the media. Well, was he saying that because he knew it was going to be 30? We don't know. No, I can't say to you, oh yeah, he knew it's going to be 30. Well, no, because the decision wasn't made from him. He say exactly on these words, I'm happy with 80%, but now it's up to the Treasury Secretary to see what really fits the best or business. So, ended up to be 30. So that's really, really good. So the market is risk on at the moment. And I think it will go true over the week as of a risk on mood. So therefore, gold selling. Most likely we're going to be having some sort of antipodian currencies as well, like New Zealand dollar, Australian dollar, having a strength. So if we go NZD USD, I had a short position like on 60 right here, and then I close on here. So I've missed around on all of this, but that's fine. Most likely we're going to be looking at New Zealand dollar continue to go lower. We're going to have Aussie dollar maybe going up. I would be careful with Aussie dollar just because it's against the US dollar. I know it's Australian dollar, but maybe we can continue to go up at 65,500. Besides that, US dollar, Japanese yen as well. Japanese yen, as we all know, it's a safe haven currency. Therefore, market is not caring about that at the moment, and most likely we will see some sort of pullback on that really big down move here, as we can see. But from these, that's pretty much what I'm looking at the market at the moment. Cool. So if we look at the commodity, right? So gold has had this rally up. Oops, sorry. Gold has had this rally up 4 hours. Good. Gold has had this whole move up here from April to end of April, just because of the risk off sort of sentiment in the market. Okay, and then mood has changed it to risk on. So what happens with the money is, okay, so some of you may not know what's risk on and what's risk off. Okay, so let me just do, where is my pencil? Where it is? There you go. Okay. Oh, it's in black. That's why I can't see. Perfect. All right. So risk on, right? RO for risk on. ROF for risk off. Cool. So risk on basically means that the market is willing to take risk. So when I say that, I want you guys to comment on the chat. When I say the market is willing to take risk, what are your thoughts on that? What do you think it's what's that? Okay, no answers. That's fine. So when the market is willing to take risk, that basically means it's willing to move away from the safe haven assets. And what does that mean? Well, Japanese yen. Oopsie. You know what? I think the best way, because some people don't like I write, so the best way is just to write. Risk on equals market is, risk off. Market is not willing to take risk. Okay. So the risk off is basically market is not willing to take risk. And that means that Japanese yen, CHF, gold, and other safe haven assets, they will fall. Okay. When the market is, they will rise. Gosh. So when the market is risk on, we have the market willing to take risk. Okay, that's pretty simple, I guess. So risk on, risk off. That's basically what has been going the last couple of days. So Japanese yen, CHF, gold, etc. equals 4. Okay, so that basically is a chit chat, very easy to see. So we have risk off. Market is not willing to take risk. So basically, buying gold, buying treasuries, buying safe haven currencies like CHF, where it's very stable, Japanese yen, where we know it's stable as well in some instance, and some so on. The risk on is the market willing to take risk. So they don't want to gold because they know that if they buy stock, the stock will go up. If they buy Japanese yen will go down. CHF will go down. Gold will go down. So they don't want gold. They don't want CHF. They don't want to protect. They want to take risk because they think it's a good, appropriate time to actually jump into the market and go for it. So, but did you guys understand that? Because I've been chatting about risk on and risk off quite a while now. And I was like, oh, maybe they don't know what it is. So better to explain. Did you guys got it? Check. Yes, yes. Okay, that's good. Do you have any questions regarding this? So we can move on? No? Okay. Now, one thing that I think it's going to be pretty helpful for us to do is if we do like these, okay? So we get there, this one, and we put here, and then we basically get that one here up, and that one down here and here. Okay, cool. So now if we look at, oopsie, sorry. If we look at this, how can we identify risk off scenarios? Well, most likely, the risk off scenarios will happen when there are too much uncertainty. Okay, so risk off equals to uncertainty, somewhere around those lines, uncertainty. That equals to high inflation. It just depends the context of the market. At this moment, well, let's bring to reality. At this 2025, uncertainty means tariffs. It means trade deals. It means basically Trump, China, the Russia and Ukraine war, and that type of thing. Okay, so risk off equals uncertainty, and uncertainty equals to 2025 on tariffs, trade deals, Trump, China, Russia, Ukraine war. So every time there is something pending on those topics, you most likely will see gold going up, CHF becoming strong, Japanese yen becoming strong, so US dollar, Japanese yen going down, Aussie, Japanese yen going down, all of the other ones, okay? So that is risk off, okay? So see, let me just move this one up, cool. Now, the risk on is equal to direction, okay, equals to 2025 less, oopsie, less tariff deals, Trump, China agreement, okay, and that type of thing. Russia, Ukraine ceasefire. Okay, cool. So that's basically all right. So that's I basically did a cheat sheet so everyone can understand what is happening into the market at this context. Okay, exactly this context. That's exactly what we're having at this moment. So we have risk off and risk on. So both of them are good to trade, but you just need to understand where you're at in the middle of the market. Okay, so for instance, we have at exactly this moment we have a risk on appetite. So basically, what will happen? Japanese yen, CHF, gold, all of the other ones, Australian dollar, New Zealand dollar, they will typically fall. Okay, as of when we have risk off, the market's not willing to take risk. So Japanese yen, CHF, gold, all of them are stable. Stable currencies, stable asset classes, they will go up. So on the risk off scenario is basically uncertainty. And that means that the tariff talks are, Trump's going to put tariffs on someone. Tariffs is going to go up into China. I don't know. Tariffs is going to be imposing to automobiles coming from UK, whatever. Trade deals, there's no trade deal between US and China. Trump and China, of course, Russia and Ukraine war. Putin is willing to stop the war, as of Zelensky said he wants to fight until the end. So there's no agreement. So uncertainty, a lot of uncertainty. The market doesn't like that. So therefore, he's going to go and buy gold. It's a natural hedge to inflation. Also, it's a natural hedge to uncertainty. Risk on. It's a direction, we know what's going to happen. Like 2025, there's tariffs due. So UK and US 10% on automobiles only, 100,000 cars exports due to the number from the last year. That's what they've come up with the deal. Good. Trump and China agreement. Trump said that 80% he's willing to do, and then ended up to do only 30. That's fantastically good. Russia and Ukraine ceasefire. Zelensky is willing to talk to Putin on Thursday, this week on Turkey to ceasefire for 90 days the war. Perfect. Risk on. Let's buy US dollar, let's buy S&P 500, let's buy NASDAQ, let's sell gold, let's sell Aussie, let's sell New Zealand, let's sell Japanese yen, CHF, all those other ones. This is trading. This is what you should be working to do, okay? So I guess I pretty much covered a lot, in this 10 minutes sort of explanation, but it's worth for everyone to understand what is really happening and how the market is trading. And that's exactly how the market is trading, okay? So let me just delete all of these. Oh, sorry, it's not here, it's here. So as I was saying, we are on a risk on. Therefore, we don't care about gold. I don't care about gold. I don't want to buy gold. I want to sell gold. So on pullbacks, what I'm going to be doing is I'm going to look into sell opportunities into gold. Okay, cool. That's pretty much it for this scenario. Look at euro dollar. Okay, euro dollar was really, really interesting. I was willing to sell above here, but not here. I was looking to buy, but then the risk changed. The risk scenario changed. So that's exactly what I mean. Last week we were into one side of things, and now we are into a completely different thing. So change it, and change it very quickly. So therefore, I'm not looking to long euro dollar anymore because US and China is the talks now. Even if we look at US dollar HN, Chinese one, we can see that the Chinese one is being very strong. Okay, majority of the emerging markets will be very strong. So like US dollar, Brazilian reais, we can see that it's very strong. Okay, so it's interesting how the market is being trading. Now, based on that, what are my expectations? Well, I do have a few trades I'm looking. Gold is one. Okay, so looking to short gold. Maybe it's going to be one of my trades. It's just at this moment, we need somewhat of a catalyst to the market, to move market at the moment. 3,200. Let me just delete these 6.0. Okay, cool. So we just need a little bit of more catalyst to move the market, but I think gold can come back below 3,200. Where should I short? Good question. I'm looking around these levels here. So I'm looking around these levels to short, and looking to maybe take some profit around 3,200. But it will depend on tonight's CPI. Okay, so tonight we have CPI from US. I think everyone is waiting for that. Okay, so what are the expectations? So if we look to the FOMC, what the FOMC is doing is they lowering the expectation of the market to cut the rates in the next coming days, in coming months. Therefore, I think a key. I think that's it's a really interesting time to look to what Jerome Powell is saying. Okay, what he says is that they have tilted risks to the upside for the inflation. So basically, he's telling me that the next release may come a little bit higher than expected. Okay. What I think happening is that it has been priced in already. Okay. So maybe we have a release tonight that it's going to be higher than expected, higher than 0.3, 2.8. And the market won't be aggressive as it could be, because I guess that this price action here, we have noted already the, of course, US-China trade deal, but plus the CPI, okay? Because last week we had Jerome Powell saying and stating that there are risks for inflation and they are maintaining the rates high for longer because of that. So if we go to the CME, remember when everyone was saying, like, I'm expecting that much of base points cut to I think it was like 120 in the beginning of the year. Everyone was expecting 115 to 150 basis points cut for the Federal Reserve this year. Well, they only did once, and they most likely will only do two more. Okay, so for June, 88% of the people are not expecting any market participants are not expecting any change. For July, 61% is not expecting any change. For September, 52% is expecting 125 basis points cut. October, pretty much similar. I think it's two away. And then December, same. Okay, so no cut. So 375.40. Let me check. 375.40. Yeah. So only two cuts is expected now. So 125 into September and 125 into October and nothing into December. Well, I guess I'm right. I don't like to say that because, it looks like I'm putting myself up, but it's exactly what I say. And like, maybe there's some people here that have been following me quite a while. Inflation is too high. And, look at Switzerland. SNB, Swiss National Bank, they try to control inflation, but look at where the inflation is now. It's at 0%, and that's not good, okay? If we look SNB inflation target, we can see that it's somewhere around 2%, okay? Should inflation track to exceed 2% on a sustainable basis, SNB would invest. What is the inflation forecast? No. What is the 2% target inflation? So it's basically 2%. 2% target inflation for S&B. And that means that anything below 2% is bad. And anything above 2% is somewhat good for the currency because it's going to be paying higher yields into that period. Okay. So, I guess that the market is moving to a risk on, and I think we can continue to see gold climbing down. Moving down a little bit. Currencies like Australian dollar, euro, all of the other ones. Euro especially be very weak, but Australian dollar is fighting to the end. If we look at GBP AUD, for instance, UVOD has been pretty good, move. Came up, closed the gap here, and now moving down. If we look to Aussie CAD, another trade that we have going up slightly. Take profit is around that. US dollar CAD, moving up as well because of the US dollar. US dollar CHF. US dollar CHF is going up very heavily. So all of these other aspects of the market is being quite interesting for me. Well, I think you have everything now. I think you guys have everything to sort of digest. I guess it's a lot of things, but keep an eye into China, US, Ukraine, and Russia. And I think you guys should be good to go. Manage the risk. And if you have any questions, guys, I'm always available on Telegram. Just send me a message and I will definitely reply to those. Thank you all. I will be here tomorrow. I won't be here on Thursday, unfortunately, but I will be here tomorrow and we can catch some good trades into the FinLogix webinar. If you have any questions, as I say, just send me the chat and we're going to be able to have a conversation. Thank you all. Have a great week ahead and I'll see you tomorrow. Bye-bye.